Come on in, sit back and relax. You're listening to the WealthTech Today podcast. I'm your host, Greg Iskowitz, founder of Ezra Group Consulting. And this podcast features interviews, news, and analysis on the trends and best practices all around wealth management technology. My guest for this episode was Lily Vittayaruksul, CEO and co-founder at a fintech vendor called Waterlily. We spoke about Lily's personal story of how navigating a relative's long-term care needs led her to start Waterlily with the goal of protecting family relationships during these difficult situations. Lily explained how Waterlily's advanced analytics and AI-powered quoting engine helps advisors compare insurance options and find the most financially efficient solutions for clients' unique long-term care needs. Lily discussed upcoming Waterlily features like AI-powered NIGO analysis and cognitive decline prediction, as well as the company's focus on enterprise and RIA distribution channels. Speaking of AI-powered analysis, how are you integrating AI into your tech stack? How many applications do you even have? More than 10? More than 20? Even 50? However many you have, you need a strategy for managing them, integrating them, and delivering a world-class experience for both your advisors and clients. Ezra Group can help turn your tech stack chaos into a competitive advantage. Our 60-day tech stack reboot is designed specifically for RIAs looking to take the first step in gaining control over their technology infrastructure without breaking the bank to do it. If you want to free your firm for exponential growth, you need to run, not walk to our website, ezragroup.com, and click the golden Contact Us button on the homepage. Whether you're struggling to scale your business or wondering why your advisor adoption of core applications is so low, the experienced team at Ezra Group will help you design, optimize, and future-proof your infrastructure. We know what works and what doesn't. All right, a couple housekeeping chores. Please subscribe to this podcast wherever you listen to podcasts. Check out our sponsor, the Invest in Others Charitable Foundation at investinothers.org. And if you are a software vendor in our space, go to our vendor portal at ezragroup.com/register and register your product with our WealthTech integration score. Now, let's kick this thing off.
All right, I'm excited to introduce our next guest. It is Lily Vittayaruksul, CEO and co-founder of Waterlily. Lily, it's wonderful to see you again.
It's wonderful to see you since the XYPN event.
Since the event, yes, it was already a couple months have gone by. Where are we reaching you now?
You are currently reaching me on the West Coast, San Francisco.
Terrific. That's nice. You have much nicer weather than we have here in New Jersey, where it's in the 20s. It's freezing. I'm happy to be inside talking to you. But it was great to see you, and I'm glad we could coordinate to get you on the podcast and talk about Waterlily and all the great things you guys are doing in the insurance space. But before we start, can you give the audience a 30-second elevator pitch of Waterlily?
Absolutely. So with Waterlily, we are a first mover AI platform for long-term care planning. We have a 3-minute intake survey where we better understand your client's information, and we predict for the client sitting in front of you what their unique long-term care needs will look like, what it will cost, and give you the tools to help them build out the most financially efficient plan that protects not only their assets, but their family relationships in the future as well.
That is excellent. And I have to say, I've told some people about your product. So I was a judge at XYPN, and Waterlily was in the XYPN Live's 2025 Advice Tech competition with a bunch of other really good products. And it was me and Michael Kitsis and my friend Amy Dutola and Davis Janowski from wealthmanagement.com. And I think you swept the judges with your presentation and your product. So you won that. Then you said you were surprised. I wasn't surprised when you also won the Advisor Choice Award, which is advisors at the conference voting. And so you took home both. How do you feel about that?
I still feel deeply surprised, deeply grateful for what it's worth, but I did feel a little bad when I heard historically you both that this competition has created both awards since you wanted to recognize sometimes different strengths in different startups. And it was very validating and motivating, though, to receive both awards, to recognize not only is it an innovative platform the judges loved, but also perhaps exactly what the advisors have been looking for all along for this topic.
Indeed. I want to break up this interview into 3 parts. So the first part, Uh, what I really was impressed with during your presentation was talking about protecting family relationships. So if we could talk a little bit about that first, and maybe so like your story and how that your personal relationships with your family members drove you to start this company.
Absolutely. So, if we have already solved for long-term care planning, I would have been in my previous career in aerospace engineering. But I founded Waterlily because we navigated, when I was quite young, a personal long-term care event where my aunt was diagnosed with terminal stage colon cancer. She was a really integral part of our first generation immigrant family. And with that came nearly 3 years of her daily long-term care needs. Because long-term care cost sits outside of health insurance. We paid anything and everything for her care, nearly bankrupted ourselves. But more importantly, unfortunately, we did bankrupt a lot of our family relationships, where that side of my family came from the Cambodian genocide, and we thought nothing could tear us apart. And if anything, the war kept us quite close together. But after this event, what we experienced, and many other American households experience, is the breakage of family relationships due to trying to figure out what is the best form of care for our loved one look like. And unfortunately, we haven't spoken to our entire extended side of our family in over a decade since the event has happened. So as a result, pivoted my technical background from aerospace, doing some work there from 12 to 16, went to college early at 14 for it, over to genetics and AI, led product and engineering at multiple early stage companies before founding this business with this mission of protecting family relationships and quality of care that could come from financially preparing for this event.
It's fascinating. I never really hear that. I mean, lots of founders want to help. Lots of founders start up companies. They want to help advisors. They want to help end investors with various needs. But it's rare you hear that type of story and positioning a product that can help keep families together. And we all think, well, families are the tightest bond, but we all hear about families that break up and that don't talk to each other for decades because of issues. So having software that at least where it can't directly improve a relationship between families, it can try to smooth over and avoid issues that could cause rifts in the family.
Absolutely, that
Mm.
is definitely our goal.
So, looking at your product, one of the other parts of it that I thought was really fascinating was the I thought was a crazy amount of analytics in the back end, right, of that platform. And we've done a lot of work with insurance companies, both large and small, from some of the largest insurance providers that also provide wealth in the country, as well as individual RIAs that also have insurance agencies. But the, what's interesting about insurance is it's so complicated. Even with the illustrations, experienced insurance agents have difficulty comparing different policies. And if they can't handle it, how can an end investor do it? Whereas you had built in this analytics, if you can explain it without anyone seeing it, but if you can explain how the analytics work and what brought you to do that, and how much work did you put in to build that?
So I'll lightly explain it, because what we ended up winning award for was not necessarily AI that predicts a client's future long-term care needs. It was the associated significant, oftentimes low seven-figure cost in the future that we now need to solve
Mhm.
for. And there was discrepancies in our understanding of solutions,
Mhm.
whether it's even how do we go about self-funding for this event, and two, more importantly, the complexities of private market solutions such as insurance, in this particular case. And so what we did, I'll tell you a little bit of a story here that got us to that point where we have a little over 2,000 consumers that are signed on to our wait list for a platform that is meant for financial advisors. This is validating that families do want to have this conversation, clients do want to have this conversation. But they're really struggling to have it with their advisor. And so I took that as an opportunity where we received over 800 consumers signed on to our waitlist in a span of 72 hours. When we got covered by the Chicago Tribune, I decided to get licensed in life, health, and long-term care, and understand where was the advisor struggling if I was the advisor. So I have a little under 200 households underneath me personally at this point, and half of them that were navigating their future long-term care needs for the first time. And when we got to the financing page, they immediately said, I want to try to self-fund for this event. And little did they realize I have a brokerage account and I think $100,000 today, if I don't touch it, is going to cover my entire long-term care need and more. And when we showed them the analytics of actually you have a shortfall of $650,000 in the future, not only are they shocked, but they immediately go towards, well, I've heard there's this thing called insurance. And that's where we thought we solved this problem, where you can upload. Our initial feature was being able to upload any type of insurance product, whether it's life with a rider, short-term care, hybrid asset, or annuity-based LTC. It just didn't matter what type of insurance product it was. What we noticed is that advisors and agents alike really struggled describing the benefits unique to the client sitting in front of them. And so we thought analytics could actually solve this problem if we could build out the AI the right way. So you could actually upload an entire insurance illustration. And initially, what we did is we modeled that product to the predicted claim scenario for the client sitting in front of us. That's where the beauty of the first half of the focusing on the client's needs becomes really magical when we think of coverage in this case, because you're no longer being sold on $2 million in max benefit. You're actually being told, well, actually, this product unique to your situation would actually only cover $450,000 in the future, which is a huge gap of, what it's marketed to cover versus what it would most likely cover. And so, of course, we oftentimes found self-funding is going to be more competitive than any product you're going to upload. That tells us a little something about how this industry has traditionally performed and how they memorized certain quotes, added in the way they educated was just had real deficits to it. And we always knew it. I think advisors always knew it, which is why they've always been cautioned, against insurance if they don't fully understand it. So that's where we came up with quote and apply, which is I kept getting frustrated that the same type of insurance quote kept getting uploaded to our system over and over again. And I just thought, what would it take to find in the entire space of possible quotes that a client could get the best possible quote, and how can we get it instantaneously, because that is what the client wanted, and the advisor wanted to also instantaneously understand, I'm not going to put insurance in front of my clients if I don't think they could even qualify for that solution, because that's then just a waste of their time. So what quote and apply did is we crunched tens of thousands of permutations of different top carriers, of different product lines, and all the ways in which you could pull that quote. What would take an advisor 11 years took us a split second to model all those different types of quotes against the claim scenario and stack rank to the top, the highest ROI product, and even show you would this client be eligible or ineligible, because we digested the underwriting guidelines and we crunched the analytics, to your point, ahead of time. And we went even further, where we also ended up pre-populating the entire full application digitally, dealing with it digitally in under 10 minutes, where we pre-fill or skip over 70% of the full application itself. So we try to get to kind of near almost like realizing of the solution, not just trying to talk about it hypothetically.
Yeah, you said a lot there, and I'm taking notes, even though I know a lot about your product. So can we just unpack a second? 200,000 households. That was the retail households that signed up for the beta of Waterlily?
So we don't go D2C at all. Our platform is SaaS, that is sold to the financial advisor or even care professionals as a subscription, a monthly subscription or an annual subscription. So that's where advisors use our software.
Oh, right.
But
You got it certified it as an advisor
I did.
and started bringing on clients.
Yes.
And
So
you had
we had
200,000 clients?
Well, no, no, not 200,000 clients. For what is worth, we have a little over 2,000 consumers on our wait list today that we've gathered over the last 6 months, where they learned about us through website, not through ads. It was all occurring organically. And I
Right.
decided to take on roughly about 200 of those
Oh, why
households.
did I think 200,000? Sorry, 200. It's a big difference. Right. A thousand times worse. All right. So you had 200. You said you received 800 consumer sign up to the wait list initially, but now you certify yourself as an advisor, so you're not going B2C. You're servicing them as an advisor. It's 200 households.
So I do it free of charge for the
Mhm.
sake of learning. So
Right.
I'm definitely not trying to become an advisor myself, but I did want to understand, why were these families where actually a third of them had wealth advisors.
Mm.
Why were they coming to me to talk about this topic?
Hmm.
And that's where I learned a lot of fundamental issues with the space, including how deep the misunderstanding was
Yep.
for consumers as well as for advisors around insurance, as well, or around what does it even look like to self-fund for this event.
Yeah. Lily, hold on just one second. Sorry, somebody at my door. All right. Well, we'll just cut that a little bit out. 13, 20. Okay. So what I'm thinking is when you said quote and apply, you said the same quote kept getting uploaded over and over again. What kind of quote was that? And did you think that policy would be bad for consumers?
Great question. So we oftentimes saw that 3% inflation protection was standard, which is like a good rule of thumb or heuristic. 4 year or 6 year sort of like plan. And if it was a hybrid asset-based product, then it was initially like 100K lump sum sort of premium. So that kept getting uploaded over and over again. And I would go to the BGAs and I even asked them when I got licensed, how do you guys pull a quote? Because I only see the quotes that are uploaded, but can you train me on how you pull quotes on your side? And that's when I realized they pull it the same way every single time, despite the client sitting in front of them. Sometimes wealth advisors like to do kind of funkier things, like
Mhm.
a sort of 20-year or 30-year sort of premium structure. What's fascinating is I oftentimes see that ROI is lower than even going with the standard best practice, even though they're trying to optimize something tax-wise. And
Mhm.
to answer your question, I oftentimes saw that the traditional or old school way in which you pull a quote compared to self-funding was in from an ROI perspective was oftentimes just as competitive as self-funding or sometimes even lower. So then
Mhm.
why would you even consider the insurance if you
Right.
could self-fund and get the same outcome
Well,
in
was
for
it because they
scenario?
pulled the quote wrong? Or was it really the problem? Is a problem really with the underlying insurance? Or is it that was a problem the way the advisor was pulling the quote?
It was the way that we were pulling the quote because they could have pulled the quotes like 200 other ways.
Mhm.
They just always memorized one way in which you pull it.
Mhm. Right. So the issue is that insurance agents who also became advisors either didn't understand the policies or the software they were using to pull the quotes was so hard to use. They just learned one way to do it and just did that way all the time, even though there was hundreds of other ways to do it that could make it better for the clients. They never did it that way because they just didn't know how to do it because it was too hard,
Mhm.
too complicated. So you've put basically a layer an AI intelligence layer on top of that to make it easier.
An AI intelligence layer, as well as a deep arithmetic layer as well.
Mhm.
So so one is like for the policy upload, of course, like there's the AI piece, there's the predictive care needs that we took into account were very crucial and core to personalizing what could the best possible solution for this client sitting in front of us look like. Because the way that a quote is pulled for a 50-year-old female with light health issues is going to look fundamentally different from the same female with like heavier kind of like health issues, whether it's the difference of underwriting of the carrier, but also just because her future long-term care needs for someone that is probably healthier, she might have a higher chance of dementia. If that is a worry that we need to take into account, you're going to want to prepare your coverage a little differently than that. So we automatically crunched all those numbers so that for the advisor sitting in front of them, for sitting in front of us and the client, you just have to click next, 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 and back, 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 which is what we
Mhm.
showed in the platform.
Excellent. So that's really cool, I thought. And one thing I liked also about your product when you're showing, I can't remember the actual screen, but you were showing here's the cost of the insurance and here's the potential payout in that policy. And they were different. So you were sort of arbitraging between the different policies that no one really had seen before.
That is correct. I think a lot of people got stuck with, I can't compare apples to apples for traditional long-term care products compared to like life with the rider, compared to hybrid asset-based um, uh, products. And we said, yes, you could do that. You can do that if if we looked at it less so from a product perspective and you looked at it from the client's needs perspective, if we looked at their predicted needs and it might be $1.8 million in the future, we know what that growth of care needs look like, we could then model the product terms to those needs to see how would it actually pay out if their claim kind of went as expected. So it's simply if we know what age you'll stop paying premiums, if it's one of those that occur over time, or if it's a single lump sum premium, we know money in. And when we model the claim payout, it's just money out. So we are then able to compare different types of products. That's why it didn't matter to us. We don't bias towards one product versus another because it all kind of just goes back to what wealth advisors love or advisors is what is the financial efficiency? What is the money in, money out scenario, whether you can compare cumulative ROI, IRR, or CAGR.
It seems to me that insurance companies would be nervous that this is now available because they've been operating this way for 100 years. No one really knows the difference between policies. Advisors just push out, agents just push out XYZ policy because that's what they know what to do. So they're seeing the same policy being sold for years and years and years, and they don't seem to think that that's a problem. But now advisors who are using Waterlily are going to be going from selling the exact same policy over and over again to selling a wide variety of policies structured in many different ways. Has that raised any red flags at the insurance companies?
When you go to senior enough individuals at these insurance carriers, it does not. And the reason why that is, it's actually quite fascinating. A lot of them, a lot of, folks that might not really understand how insurance worry about is like, oh, well, what if you end up giving them a better offer than we ever really wanted to give them anyways? And what you see is actually something that's the opposite, is that when you don't personalize the product to the client sitting in front of you, and that's where you see a lot of historical 5% on top of a really high base to start. Not only is the premium really high, but oftentimes someone can actually be over-insured for what their risk actually looks like. And that could look like really weird tail end risk for the carrier themselves that they now have to manage their block on, which could affect, sort of the history that you see. And so when you actually right size a product, you'll then see that sometimes what could be the highest ROI is oftentimes when the base is low and sustainable for the client sitting in front of us, and how that base amount could grow through some form of inflation protection, just as an example. So when you right size it, there's no weird kind of discrepancy between what the needs will look like and what the coverage is. And not only does the client and advisor understand it, but they purchase more of the right products that are right fit for their particular needs, but you have more of those types of products that are sold that help control the risk of the pool or even grow the pool so that we could have an overall lower risk in the population, not just what we have bias towards, which is the people who have dementia in their family or have had a history of being sick all the time. They're the ones that are desperate for these products. And all of a sudden you have negative selection bias. Oh, you're muted, by the way.
I'm just blabbering away. If I could restate what you just said, I think what you're saying is that your software, because it's able to drill down into the insurance policy parameters and optimize, instead of everyone getting the same policy, which creates risk on both ends. By using your software, you're balancing it out where, yes, you'll get tail end risk, you reduce tail end risk, but you'll also reduce front end risk. So it'll balance out for the insurance carrier.
Not only it balances out for the ecosystem is the
Mhm.
way that I look at it. When I first built out this system, it was for wealth advisors. I understood insurance product more as a necessity of not being able to fully like self-insure and many clients that were unable to afford completely self-insuring themselves. And
Mhm.
so that's how I've gone about understanding insurance and recognizing that there is a massive amount of distrust actually between the advisor and the carrier. And oftentimes you can solve for that in terms of like, why does insurance even fundamentally exist in the first place? It is a tool in a tool
Mhm.
set. The better you could help educate folks on it's just a tool in your toolbox, I think the better off we all are about making smarter and financially efficient decisions.
Indeed. All right, we're getting close to the running out of time here. I want to squeeze in a couple more questions. What are some of the new feature functionality you're going to be adding to Waterlily in 2026?
Oh my goodness. Well, actually, something we're about to launch quite quickly is our AI NIGO analysis. So, an advisor, this is probably what excited most advisors is you don't need an insurance license and you don't need to
Mm,
accept commission to be able to explore an insurance policy that can be more financially efficient than purely just trying to self-fund. And
mm,
you can do that end to end yourself. You don't have to talk to a BGA or an IMO, and the AI NIGO analysis will actually stop you from sending in an application that would have a not in good order status because we automatically tell you, hey, you put something here. I don't think this will be accepted by a carrier. Like this is
mhm,
not a real zip code, whatever you randomly put in. And so
mhm,
we kind of make sure that you go through that analysis so that whatever you ship, it is with continued confidence that like and peace of mind of like, okay, I'm doing everything right and I don't need a human expert to help me, with that particular process. What we're about to launch in about 6 to 9 months, if not sooner, is a cognitive decline predictive analysis. So a lot of folks worry about long-term care, not just in terms of their most likely kind of ADL risk, but I'm worried about dementia. I'm worried about Alzheimer's. We have a ton of cognitive decline data, and that could be the secondary scenario that an advisor can prepare their client for. In this case, and please also expect a bunch of integrations. We actually really believe in integrations, making it
mhm.
as easy as possible to put all the tools in one spot for the advisor to just do their job more efficiently and effectively.
Lily, that is fantastic. I wish I had more time to talk to you, but we're out. And where can the audience find out more information about Waterlily?
Simply waterlily like the flower.com, and you can go ahead and sign up directly today. Go through a 2-week free trial, and we have some incredible self-guided videos that you can go through so you never have to talk to us. We recognize you're busy,
You
and
never have
sometimes
to. That's a great pitch. You don't have to talk to us. Just sign up.
yeah,
Fantastic. Lily, thanks so much. It was wonderful talking to you.
fantastic. Thank you for having me.
Hey, it's Craig again. Here are my top 3 takeaways from this episode. Waterlily's mission is not just to solve the financial challenges of long-term care, but to help preserve family relationships that can often be strained during these difficult situations. Waterlily's advanced analytics and AI-powered quoting engine are designed to overcome the complexities and limitations of traditional insurance planning tools. 3. Waterlily is focused on enterprise and RIA distribution, with plans to further enhance the platform with features like AI-powered NIGO analysis and cognitive decline prediction. You've reached the end of another episode of the WealthTech Today podcast. Thanks for listening. But before you go, head to our website, ezragroup.com, scroll to the bottom of the homepage, and sign up for our newsletter. Once a month, you receive an email chock full of wealth management goodness, news, information, and updates. You will not be disappointed. Thanks again for listening, and talk to you all again next time.